Hello viewers, welcome to my channel. I am Hashim Ali Khan. So right now I am giving the problems on marginal costing. Already last video I have prepared the theory of marginal costing, the subject managerial accounting. So I got so many requests from the students to give the videos on the subject managerial accounting. So that's why I have started this subject. And first topic I have selected is marginal costing. The last video I have given the complete explanation of this costing technique, marginal costing technique, and what are the formulas and different concepts I have explained in detail. So before going for problems, you must watch the theory. Then only you can be able to understand the concept, the meaning of different terms which are used, and what are the formulas we have to apply in these problems of marginal costing. All these things I have explained in the previous video. So for watching the previous video, go to the playlist, select the subject managerial accounting. In that subject you will find the videos of marginal costing. Select the video, watch the video till the end. Definitely you will gain a lot of knowledge. Then only you should come to the problem. And if you are new to my channel, I suggest you to visit the playlist. I have uploaded the videos on different subjects: financial accounting, advanced accounting, cost accounting, corporate accounting, income tax, financial management, investment management. So many videos I have uploaded on different topics. Select your subject, select the topic, watch the video. Definitely you gain a lot of knowledge from these videos. Now, before starting the next problem, already 9 problems I have solved in the previous video. Now I am going to start from the 10th problem. So before watching the video, you must have a printout of the problems of this marginal costing. I have provided all these problems in the link under my description. So go to the description, find the link, last line, take a printout of the problems and keep it ready before watching the problems. Now I am reading out the 10th problem. See the problem number 10. Compute break-even point from the following particulars. So what are the particulars given? Fixed expenses 3 lakh, variable cost per unit 16, selling price per unit 21. See, break-even point is that point at which there is neither profit nor loss, where the total sales and total cost will be equal, nothing is left. That is called break-even profit, break-even point. So in this problem we have to calculate break-even point. Now BEP can be calculated either in quantity or in monetary value. If you want in quantity, in units, the BEP in units formula is fixed cost divided by selling price per unit minus variable cost per unit. This formula if you apply, you will get BEP in units. So after calculating BEP in units, you can calculate BEP in rupees, right? Now see the solution of this problem. Sales are given 6 lakh. In the problem it is given 10th problem. Sorry, I have read out the 9th problem. Actually it is the 10th problem we have to do. From the following figures, calculate the sales required to earn a profit. This is the 10th problem. From the following figures, calculate the sales required to earn a profit of 1,20,000. Now how much sales we have to conduct in order to get a desired profit of rupees 1,20,000? Sales are given 6 lakh, variable cost is given 3,75,000 and fixed cost is given 1,80,000. First you write down the information which is given in the problem. Sales 6 lakh, S stands for sales, sales 6 lakh, variable cost 3,75,000, fixed cost 1,80,000. These 3 are given. By using these 3, we can find out the PV ratio, profit volume ratio. It's a vital ratio which is used in number of problems for taking number of decisions. The PV ratio formula C by S into 100. C stands for contribution. C stands for contribution. And in place of C, we can write S minus V or we can write F plus P. There are 2 formulas for C. This contribution formula, 2 formulas are there. C is equal to S minus V or C is equal to F plus P. These 2 are the formulas for calculating contribution. Now we have to see the problem what is given. In the problem we are having S and V. We are having sales and variable cost. So in place of C, I am writing S minus V. In place of C, I am writing S minus V by S into 100. Sales 6 lakh. Variable cost 3,75,000 divided by 6 lakh into 100. So 6 lakh minus 3,75,000, 2,25,000 divided by 6 lakh into 100. 37.5%. 37.5% is the PV ratio. Ultimately, it is asking you to calculate how much are the sales required to earn a desired profit of rupees 1,20,000. Sales required to earn a desired profit of 1,20,000. In the last introduction theory video, I have given the list of formulas. 7 formulas I have given in the introduction video. So in this 7 formulas, formula number 6 is this one. The formula number 6 is sales required to earn a desired profit. The formula is fixed cost plus desired profit divided by PV ratio. Fixed cost plus desired profit divided by PV ratio. This is the formula to calculate the sales required. Fixed cost is given in the problem 1,80,000. Desired profit 1,20,000. And PV ratio just now we have calculated 37.5%. We can write in percentage or we can write in fraction. There is no difference. We can write 37.5% or we can write 0.375. This is in percentage and this is in fraction, and both are correct. We can write PV ratio in percentage or we can write PV ratio in fraction. Both are same. So denominator I have taken 0.375 instead of 37.5%. You can take 37.5% also, you will get the same answer. You will get the same answer. 37.5 percentage you should press. So 1,80,000 plus 1,20,000, 3 lakh. So 3 lakh divided by 0.375, you will get 8 lakh rupees. So sales required is 8 lakh rupees to earn a desired profit of rupees 1,80,000. So when we make sales of 8 lakh rupees, we will get a profit of 1,20,000. That's it. This is the end of problem number 10. Now, 11th problem. What would be the volume of sales to derive a profit of 20,000? What would be the volume of sales? When is sales required to earn a desired profit of 20,000? Just like the same previous problem. Here also directly we have to calculate sales required to earn a desired profit of 20,000. If the PV ratio is 66 2 by 3%. Previous problem PV ratio was not given, so we have calculated a PV ratio, then we calculate sales required. But in this problem PV ratio is given in the problem 66 2 by 3% and fixed overhead for the period 40,000. The fixed cost is also given 40,000. Now PV ratio is 66 2 by 3%. 2 by 3 means 0.666 you will get. This 2 by 3, 2 divided by 3, you will get 0.6666 like this you will get, right? So 66.66667. You can take all 66 because on calculator if you type 2 divided by 3, you will get 0.666666 infinity. Up to infinity it will go. So we will write 66.6667. You can write 66 2/3 2 by 3 or 66.6666%. Sales required to earn a desired profit of 20,000. Formula is fixed cost plus desired profit divided by PV ratio. PV ratio. The fixed cost is 40,000 given in the problem. Desired profit 20,000 we require and PV ratio is 0.66.6666%. If we don't want percentage, divide by 100. Just like the previous problem. 37.5 divided by 100, you will get 0.375. Similarly, 66.66666 divided by 100, you will get 0.66666. So 40 plus 20, 60,000 divided by 0.66666, you will get 90,000. You will get 89,999.9999, that is equal to 90,000. That's all. So by conducting a sale of 90,000, we will get a profit of 20,000. That's it. Now, 12th problem. Problem number 12, you see, the following data is given. Fixed expenses are 10 lakh. Variable expenses are 10 rupees per unit and selling price is 15 rupees per unit. So we are given fixed cost 10 lakh, selling price 15, variable cost 10 per unit. Now, 3 questions are asked. Indicate the number of units to be manufactured and sold to break even. First question. Indicate the number of units to be manufactured and sold to break even. That means break even point, BEP in units. In units we require. So first question, number of units required to be sold to break even. Means we have to calculate BEP in units. The fixed cost divided by selling price per unit minus variable cost per unit. The fixed cost 10 lakh divided by selling price 15 rupees, variable cost 10 rupees. So 10 lakh divided by 5, 2 lakh units. The break even point, no profit, no loss, is at 2 lakh units. So if a company manufacture and sell more than 2 lakh units, the company will get the profit. If the company manufacture and sell less than 2 lakh units, the company will incur loss. At exactly 2 lakh units, no profit, no loss. Second question. To earn a profit of 10,000, that means number of units required to be manufactured and sold to earn a desired profit of 10,000. 10,000 रुपये प्रॉफिट अर्न करने के लिए कितने यूनिट्स बना के बेचना पड़ेगा? How many units? So number of units required to be sold to earn a desired profit of 10,000. Formula number 7. In introduction video, I have given 7 formulas. The last formula is this one only. Number of units required to be sold to earn a desired profit. The formula is fixed cost plus desired profit divided by selling price minus variable cost. Fixed cost plus desired profit divided by selling price per unit minus variable cost per unit. The fixed cost is 10 lakh. Desired profit 10,000. Divided by selling price 15 rupees, variable cost 10 rupees. So 10 lakh plus 10,000. 10 lakh 10,000 divided by 5. 2 lakh 2,000 units. At exactly 2 lakh units, no profit, no loss. If we make and sell 2 lakh 2,000 units, we will get a profit of 10,000. We'll get a profit of 10,000. When we'll get? When we make and sell 2 lakh 2,000 units. Second question complete. Third question. What additional units would be necessary to increase the above profit by 5,000? What is the additional number of units to be sold to increase the above profit by 5,000? Above profit ka matlab 10,000 profit. Here earlier we have taken 10,000 profit. In this 10,000 we have to increase it by 5,000. So 10,000 plus 5,000, 15,000. Now we need how many units to be sold to earn a desired profit of rupees 15,000. So additional number of units required to be sold to increase the above profit by 5,000. That means desired profit will become 15,000. This 10,000 plus 5,000. Now number of units required to be sold to earn a desired profit of 15,000. Fixed cost plus desired profit divided by SP minus VC. So fixed cost 10 lakh, desired profit 15,000 divided by 15 minus 10. So 2 lakh 3,000 units. When we make and sell 2 lakh 3,000 units, we will get the desired profit of rupees 15,000. 15,000. तो पहले 2 lakh 2,000 units अगर बना के बेचेंगे तो we are getting a profit of 10,000. If we make and sell 2 lakh 3,000 units, we are getting a profit of 15,000. So in order to increase the profit by 5,000, the additional number of units are 1,000. Additional number of units are 1,000. 2 lakh 2,000 units से बढ़ के कितना होना? 2 lakh 3,000. अगर 2 lakh 2,000 यूनिट्स बनाएंगे तो 10,000 प्रॉफिट मिलेगा. अगर 2 lakh 3,000 यूनिट्स बना के बेचेंगे तो 15,000 प्रॉफिट मिलेगा. So in order to increase the profit by 5,000, we have to sell additional 1,000 units. That's what. For increasing the above profit by 5,000, additional number of units to be sold is 1,000 units. That's it. This is the end of problem number 12. Now, see the problem number 13. From the following data, calculate the break-even point. BEP मालूम करना है. So we have to see the information. Selling price per unit. When per unit information is given, we can calculate BEP in units also. when per unit, selling price per unit, variable cost per unit, when per unit information is given, we can calculate BEP in units. So selling price per unit 20 rupees, direct material cost per unit, direct labor cost per unit, direct expenses per unit, variable overhead per unit. All these 4 items, if you add up, you will get variable cost per unit. The variable cost includes direct material, direct labor, direct expenses and variable overhead. So here you can see selling price per unit 20 rupees, variable cost per unit, direct material 8 rupees, direct labor 2 rupees, direct expense 2 rupees, variable overhead 3 rupees. So variable cost per unit we got 15. So directly variable cost per unit is not given in the problem. You must know variable cost includes material, labor, direct expenses and variable overheads. So we got variable. Now BEP. Ultimately it is asking you to calculate break-even point. So BEP in units is equal to fixed cost divided by SP minus VC. Selling price per unit minus variable cost per unit. The fixed cost is given in the problem 20,000. The fixed overheads total 20,000 given. 20,000 fixed cost. Selling price 20 rupees, variable cost 15 rupees. So 20,000 divided by 5, 4,000 units. One part we have completed. It is asking you to calculate break-even point in units. So we got BEP in units, 4,000 units. 4,000 यूनिट बना के बेचेंगे तो no profit, no loss. अगर if you want to find out BEP in rupees, तो easily you can find out BEP in rupees also. So BEP in rupees is equal to BEP in units into selling price per unit. Multiply the BEP in units with selling price. How many units is the BEP? 4,000. And what is the selling price per unit? 20. So 4,000 into 20, 80,000 rupees. यानी 4,000 यूनिट बेचेंगे या 80,000 रुपए का सेल करेंगे, 80,000 रुपीस का सेल करेंगे तो हम बीईपी करेंगे. Now second question, if sales are 20% above break even point, determine the net profit. If actual sales are 20% above the break even point, then how much would be the profit? That is the question. So if sales are 20% above BEP, for how many units we are getting the BEP? 4,000. At exactly 4,000 units, the business will attain the BEP. If the sales are 20% more than BEP, it is saying the sales are 20% more than BEP. So that is sales in units is equal to 4,000 plus 20%. 4,000 BEP. BEP is a 20% extra. So 4,000 plus 20%. So 20% of 4,000, you'll get 800. 20% of 4,000 is 800. So 4,000 plus 800, 4,800 units. The sales are 20% above BEP, it comes to 4,800 units. Now we have to find out what is the profit at 4,800 units. Sales. How many units we are manufacturing and selling now? 4,800. What is the selling price per unit? 20 rupees. So 4,800 into 20, 96,000 rupees is the total sales. From sales, we subtract the variable cost. So minus variable cost. 4,800 units into 15. Variable cost per unit is 15 rupees. Multiply 4,800 into 15, 72,000. So 96,000 sales, 72,000 rupees is the variable cost. Minus kar do, contribution 24,000. 24,000 is the contribution. Less fixed cost. The fixed cost will remain same whether we make 4,000 units or 4,800 units. The nature of fixed cost is it will remain same whatever be the level of activity, whatever be the number of units. चाहे 1,000 यूनिट बनाओ, 4,000 यूनिट बनाओ या 4,800 यूनिट बनाओ, the fixed cost will remain same. The fixed cost 20,000. So 24,000 minus 20,000 profit 4,000 rupees profit. So if the sales are 20% above BEP, then we will get a profit of rupees 4,000. That's all. So this is the end of problem number 13. The next problem number 14. See the 14th problem. In 14th problem, we have 3 bits A, B, C. One by one, we will do the bits. A bit. In A bit, A company makes 5,000 rupees profit from 60,000 rupees sales. So we are given a profit of rupees 5,000 and sales as 60,000. Fixed cost are rupees 15,000. 15,000 rupees, 15,000 fixed cost. What is the break-even point? BEP we have to calculate. Now see here, profit is given 5,000, sales are given 60,000 and fixed cost is given 15,000. We have to find out the BEP. For calculating the BEP, we require PV ratio. Without PV ratio, we cannot calculate BEP. So PV ratio formula C by S into 100, contribution by sales into 100. Now in place of C, we can write S minus V or we can write F plus P. Two formulas are there for contribution. For contribution, we have two formulas. The C is equal to S minus V or C is equal to F plus P. Any one of these formula we can apply to calculate the contribution. Now it depends on the problem, what information is given. In our problem we are given P and F. So we cannot calculate S minus V. We can calculate F plus P. So in place of C, I am writing F plus P by S into 100. Fixed cost is 15,000, profit is 5,000, sales are 60,000 into 100. So 15 plus 5, 20,000 divided by 60,000 into 100. So it will become 33.33%. 33.33% is the PV ratio. Now ultimately we have to find out the BEP. The formula for BEP, break-even point, in rupees. We cannot calculate in units because per unit information is not given. BEP can be calculated in units only when per unit information is given. We are not given per unit information. So directly we can calculate rupees. The BEP in rupees is equal to fixed cost by PV ratio. Fixed cost is given in the problem 15,000. 15,000 divided by 0.3333 because 33.33%. It is not 33.33, it is 33.33333 continuously till the last digit of your calculator. So if you restrict to only 33.33, you may get some rounding off error. So instead of taking point 33.33, you should on calculator take 33.33333% or 0.33333 continuously till the last digit. You will get 45,000. The break-even point is 45,000. First A bit completed. Now B bit. A company's sales are rupees 1 lakh. So S is equal to 1 lakh. And fixed costs are 20,000. F is equal to 20,000. And break-even point 80,000. BEP is 80,000. And we have to calculate the profit. How much is the profit we have to find out. We are given sales, fixed cost and BEP. See, by using the BEP, we can calculate the PV ratio by using the BEP formula because BEP is given 80,000. So you must know the formula BEP is equal to fixed cost by PV ratio. BEP is equal to fixed cost by PV ratio. By using this formula we can calculate PV ratio. And by using the PV ratio we can calculate the profit. Here you can see. First BEP. The formula for BEP is fixed cost by PV ratio. BEP is given in the problem 80,000. So in place of BEP 80,000, fixed cost is given in the problem 20,000. So 20,000 divided by PV ratio. Now cross multiply. If we make a cross multiplication, 80,000 into PV ratio is 80,000 PV. 20,000 into 1 divided by 1. See here, cross multiplication I am making here like this. 20,000 into 1 is 20,000. 80,000 into PV ratio, 80,000 PV ratio. So PV is equal to 20,000 by 80,000. PV ratio is 20,000 by 80,000. That will you will get 0.25. 20,000 by 80,000 you will get 0.25. Or in percentage terms it will be 25%. अगर fraction से percentage में लाना है तो multiply by 100. If you want to convert from fraction to percentage, multiply by 100. Percentage to fraction, divide by 100. Right? So 0.25 into 100, it means 25%. Both are correct. You can say PV ratio 0.25 or PV ratio 25%. Now MOS. The formula, two formulas I have given for MOS, margin of safety. Two formulas I have given in the introduction video. So if you have watched that video, definitely you are confident on the formulas. तो फर्स्ट फॉर्मूला MOS is equal to actual sales minus break even sales. तो MOS is equal to actual sales. How much are the actual sales here? 1 lakh. Actual sales are 1 lakh and break even sales are 80,000. So actual sales minus break even sales, 1 lakh minus 80,000. 20,000 rupees is the MOS, margin of safety. But ultimately what we have to find out here? Profit. We need the profit. So one more formula is there for MOS. Two formulas are given. One formula actual sales minus break even sales. Another formula profit by PV ratio. Profit by PV ratio. Now MOS already we have calculated 20,000. So in place of MOS I am writing 20,000. Profit we don't have. But PV ratio already we have calculated here. How much is the PV ratio? 0.25. Now cross multiply. 20,000 into 0.25 is equal to P into 1 P. Cross multiply अगर करेंगे तो P into 1 P. 20,000 into 0.25 is 5,000. So P is equal to 5,000 or profit is equal to 5,000. B bit completed. C bit. A company has a profit of rupees 5,000. So profit 5,000 and fixed cost 10,000. Fixed cost 10,000. Break even point 20,000. And what is the sale? हमको मालूम करना है sales. How much are the sales? This is the information given. Again, by using this BEP, we can find out the PV ratio just like the previous problem. You have to manipulate all the formulas. If you remember all the formulas, you have to simply manipulate by using which formula what we can get. So BEP, by using the BEP formula, we can get the PV ratio. So BEP in rupees is equal to fixed cost by PV ratio. BEP is given 20,000. Fixed cost is given in the problem 10,000. Divide by PV ratio. Cross multiply. So 20,000 into PV is 20,000 PV. 10,000 into 1, 10,000. Now PV is equal to 10,000 divided by 20,000. Because there is multiplication sign here. 20,000 into PV है, इधर ला लिया तो divide हो जाएगा. तो 10,000 by 20,000, 0.5. तो PV ratio we got 0.5 or 50%. You can call it as anything. Both are same. Now MOS. The formula for MOS, two formulas are there. MOS, one actual sales minus break-even sales, one profit by PV ratio. So first I'll apply profit by PV ratio. MOS, we have to find out. Profit is given in the problem 5,000. In the problem, profit is given 5,000. Divided by PV ratio. PV ratio just now we have calculated 0.5. So 5,000 divided by 0.5, you will get 10,000. So MOS is equal to 10,000. Use the calculator. See, 5,000 divided by 0.5, 10,000. So MOS we got. But actually what we have to find out here? Sales. Actually we have to find out what are the actual sales. So again we use MOS formula. MOS is equal to actual sales minus break-even sales. So MOS already we have calculated 10,000. So in place of MOS I am writing 10,000. Actual sales we don't have. We have to find out. Minus break-even sales are given in the problem. BEP 20,000. So in place of break-even sales 20,000. Now keep this actual sales on RHS and take this 20,000 to LHS. Right now this 20,000 is on RHS, right hand side. If you want to take it to LHS, minus 20,000 will become plus 20,000. So 10,000 plus 20,000 is equal to sales. So actual sales are 30,000. That's all. So 14th problem A, B, C. 3 bits we have completed. 15th problem. Problem number 15. From the following information, calculate the break-even point and turnover required to earn a profit of 36,000. BEP we have to find out. And what is the turnover required, sales required to earn a desired profit of 36,000. Fixed overheads are 1,80,000. Variable cost per unit 2 rupees, selling price per unit 20 rupees. So VC per unit and selling price per unit is given. In this problem, per unit information is given. So we can calculate BEP in units also. See carefully. Fixed cost 1,80,000. Selling price per unit 20 rupees, variable cost per unit 2 rupees. This is the information given. So first we calculate PV ratio. PV ratio C by S into 100. Already we know the formula for PV ratio, contribution by sales into 100. Now in place of C, I am writing down S minus V because I am having the selling price and variable cost. What is the selling price here? 20 rupees. What is the variable cost? 2 rupees. So 20 minus 2 divided by 20. We can take the total sales or we can take the selling price per unit. We'll get the same answer. In this problem, we don't have a total sales. We have selling price per unit, variable cost per unit. So 20 minus 2 divided by 20, 18 by 20 into 100, 90%. The PV ratio we got 90% or 0.9. Now BP in units. BP in units, the formula is fixed cost divided by SP minus VC. The fixed cost 1,80,000. Selling price 20 minus 2. 20 minus 2, 18. So 10,000 units. BEP, break-even point in units, is 10,000 units. Now if you want in rupees, simply multiply BEP in rupees is equal to BEP in units into selling price per unit. So BEP in units we got 10,000. Selling price is given in the problem 20 rupees. So 10,000 into 20, 2 lakh rupees is the BEP in rupees. Alternatively, instead of using this formula, we can use this formula also, we'll get the same answer. Just for verification, I am writing down the other formula, alternative formula. The BEP in rupees is equal to fixed cost by PV ratio. Fixed cost 1,80,000. PV ratio already we have calculated 0.9. So 1,80,000 divided by 0.9, you are getting 2 lakh. So either by using this formula or this formula, always you will get the same BEP in rupees. Now it is asking you sales required to earn a desired profit of rupees 36,000. It is asking in the problem how much sales we have to make to earn a desired profit of 36,000. Formula number 6. 7 formulas I have given. 6th formula is sales required to earn a desired profit. The formula is fixed cost plus desired profit divided by PV ratio. The fixed cost 1,80,000 given, desired profit 36,000 and PV ratio is 0.9, already we have calculated here. So 2,40,000. So 2,40,000 is the total sales required to get a desired profit of 36,000. तो 2,40,000 रुपए का सेल करेंगे तो प्रॉफिट आएगा 36,000. Now, last line it is asking you, if the company is earning a profit of 36,000, express the margin of safety available to it. If the company is earning a profit of 36,000, how much is the margin of safety, MOS? So profit is given 36,000. We know the formula of MOS. 2 formulas are there. Actual sales minus break-even sales. ये एक formula है. और एक formula है profit by PV ratio. Profit by PV ratio. So second formula easily we can apply because profit is given 36,000. Profit is given 36,000 and PV ratio already we have calculated 0.9. 36,000 by 0.9, MOS is equal to 40,000. That's it. 15 problems I have explained. I have explained in detail. Hope my viewers, my regular viewers, my students can be able to understand me. If you are satisfied with my lecture, with my subjects, with my explanation, give a like to the video, share it in your group, subscribe if you have not yet subscribed and give your comments. We'll continue the next problem in the next video.